Good evening, everybody, and thank you so much for joining in. The day has been absolutely wonderful. So much of information, so many esteemed speakers that we are getting a chance to hear from. So, with this, I would want to welcome you to the second edition of the world's largest fintech fest, Global Fintech Fest, organized by Fintech Convergence Council and Payments Council of India, of Internet and Mobile Association of India, and National Payments Corporation of India. This fest is presented by the Ministry of Electronics and Information Technology, Government of India, and Reserve Bank of India, and supported by Niti Aayog, Startup India, and Invest India. This session is sponsored by HSBC. So, moving forward, I would also like to thank our partners, our platinum partner Visa, AWS, PhonePe, our diamond partner Cred, our country partner Australian Government, our track partner HSBC India, and Refinitiv India, and our session partner, the UK Government Department for International Trade. Thank you so much to all our partners for supporting us. This second edition of the summit with the theme FinTech, Empowering a Global Digital Economy, will provide an in-depth understanding of the latest businesses, policy, investment, and technology developments within the FinTech landscape globally. We welcome you all to the fireside chat on a very interesting topic, and that is central bank digital currency, which is also called CBDC. So, without further ado, let me invite our esteemed guests right here. To begin with, let's invite our session moderator, Mr. Suvir Davda, Director, Corporate Sales, Markets and Security Services, HSBC India. Shri Anuj Ranjan, General Manager, Reserve Bank of India. Alexi Grimm, Head of Digitalization, Bank of Finland. Mark Williamson, Managing Director, Global Head of FX Everywhere, Partnerships and Propositions, Markets and Security Services, HSBC Bank PLC. Thank you very much to each one of you for joining in. It's absolutely a pleasure to host you. Over to you, Mr. Suvir.
Thank you. Am I audible?
Yes.
Okay. So, good afternoon, good morning, good evening, ladies and gentlemen, and welcome to the panel discussion on CBDCs and its economic implications. I think my job for this session is honestly relatively simpler due to the sheer interest which is already there in this subject, which is central bank digital currencies. CBDCs, as they call it, cryptocurrencies, stable coins, have been the topic of policy deliberations and heightened interest by both financial investors as well as businesses. As an introduction to the concept for someone who is new to this subject, CBDCs are basically a digital representation or form of sovereign or fiat currency, which is issued and backed by central banks. I would say they're an alternative way of holding money and is a digital way of holding your cash. Now, the natural question, especially for a country like India, where we have such a strong digitals and payment infrastructure network, is how does a CBDC vary from a UPI, from NEFT, from wallets, from cards? And that's exactly what we're going to try and answer in this panel discussion. To start with, I thought one of the few differences I could highlight could be the possible technology which CBDCs use. We've heard a lot about distributed ledger technology, and a CBDC could use that technology as its underlying rail, or it could even use a mix of the existing payment rails and the DLT, as we call it, as the second layer of the payment rail. This technology obviously helps in speed, efficiency, security. And another thing which is catching, I would say, a lot of interest nowadays is what we call as smart contracts, which is programmable money, which is you execute buy and sell transactions based on predefined criteria. Another interesting aspect is the form and issuance of the CBDC, and also, whether it's an account or token form, something which we will discuss in this panel discussion. I'm joined by three very knowledgeable individuals who have a vast amount of experience amongst themselves. We have individuals who are part of the financial services industry and also individuals who are associated with central banks, namely the RBI and the Bank of Finland. The sheer diversity of this panel, I'm sure, will give us a holistic view on this relatively new subject. With that, I'm going to start my panel discussion, and I'm going to start with you, Mark. Again, I'd start with, for beginners, what would you describe as the main feature of the CBDC over regular money which you and I hold in our wallets or in the ATM? If you could throw some light on that, please.
Yeah, sure. Thank you very much, and hello everybody. Good afternoon, good morning, good evening. I think it's worthwhile just putting this into context of where this new form of money sits, and also just to give a bit of context around where we are in the industry. You know, as an industry, we're going from Blockbuster to Netflix, and we're starting to digitize a lot of the payments and rails that we use on a day-to-day basis. Also heard it is referred of moving towards the Internet of Money, and that transport mechanism for the Internet of Money is distributed ledger technology, as you said, Suvir. So when we're looking at the digitization of currency as a store of value and payment, I think it's also worthwhile looking at what sort of design aspects that we're looking at when considering CBDC, and especially considering that CBDC in circulation is roughly 10% of money that's in circulation within the economy. Whereas if you look at private money or commercial bank money, it's about 80 to 90%. So we have these different forms of money in circulation today. And when we're looking at the different forms of money and the $18 trillion per day payments and FX market, there's a few things that we look at as we start to move towards these new forms of digital cash. So we look for settlement finality. We need to ensure that we look at regulated money and liabilities, that those regulated monies and liabilities are fungible, durable, portable, recognizable, and probably most importantly, stable. And we're also looking at the new digitally native formats that are starting to emerge, so whether they're token or account-based. And when we look at account-based and regulated forms of money that's in circulation today, we have central bank money, which is liability against the sovereign nation state and the reserves of that. We have commercial bank money, which is backed by issued by commercial banks and is backed by assets on the balance sheet and is part of fractional banking. We have e-money, which is relatively new as far as what's in circulation today, and that is issued by fintechs, and it's where you take money from your commercial bank and put it into a digital wallet so that you're able to spend that on a particular platform. And then what we've seen emerge over the last 5 to 10 years is token-based or quasi-regulated forms of money. So whether that's stable coins, and those stable coins the risk is against the issuer. So whether that is USDC or US dollar currency or Tether, or even though it's not out at the moment yet, the Facebook Libra or DM money as well. And then finally, we have cryptocurrency, which is starting to become more and more part of the worldwide economy. But it's important to note there that there's no liability and there's intangible assets that back it up. So hopefully that gives a bit of a picture of the landscape and how we describe CBDCs.
No, no, thanks, Mark. That really does give us some color. I'll go to Sir Anuj Ranjan from the RBI. So the question for you would be, in a country like India, where I think we pride ourselves in the fact that our payments infra and the digital forms of money which our population already holds is so world class. What do you see as the true value of a CBDC?
Yeah, thanks, Suvir, and good morning, good afternoon, good evening to all the people on the line. I'll answer the question assuming that it pertains to introduction of CBDC in retail segment. See,
Sure.
currently people are able to hold central bank liabilities only in physical form, that is cash. Now, CBDC will provide a digital alternative to that, and at most basic level, if we can say, would fulfill the aspirations to hold and transact a central bank liability digitally. So that is the. But to the question on the advancement in payment and system in India, let me bring the perspective before I respond to the query. See, as we all know, is India is leading the world in terms of digital payments and innovations. It's 24/7, whether it is retail or wholesale, and customers have an impressive menu of options of doing transactions, which is reflected in that we have a CAGR of 55% in the over the last 5 years. So it's not only safe, secure, but we have a very strong legal framework that empowers the central bank to regulate and supervise payment systems. Now, it is very natural, therefore, that you are asking a question that such an impressive progress of digitization, is there a case for CBDCs in India? My submission would be, see, despite the leaps in digitization, the so many surveys indicate that the cash remains the preferred mode of payment, and for receiving money for regular expenses, especially the small value transaction, it continues to be the main stay. And this is a very unique scenario for India, where there is a proliferation of digital payments, as also the uses of cash is being sustained, for especially for small value transactions. So as long as a discomfort for digital modes of payment vis-a-vis the cash, CBDC is unlikely to replace cash uses. But preference for cash for its anonymity can be redirected to acceptance of CBDC as long as reasonable anonymity is assured. So that is one area where we can think of. Then, as Mark was mentioning in the last item, the cryptocurrency, the private virtual currencies, that could be may well be another reason why CBDCs may become and might become a necessity. Developing our own CBDC could provide the public with uses that any private virtual currencies can provide, and to that extent might remain public preference for the rupee. It could also protect the public from the abnormal, we have seen the volatility in those currencies, and also prevent any disruptions to Indian banking and monetary systems. See, one more important thing is India's high currency to GDP ratio also kinds of holds out another benefit for CBDC. So to the extent large cash uses can be replaced by CBDCs, the cost of printing, transporting, storing, distributing, all that can be reduced. So CBDCs would be basically a build upon the current payment infrastructure. For example, the seamless interbank transfer through UPI, which is a very popular mode, can very well be extended to CBDCs, and thus the payment and the digital currency system can function in unison. So it is not that it can only use the current thing and move forward. So basically, idea is to take India towards a less cash economy. So that is how I'll put it.
No, thank you, sir. I think very, very, very self-explanatory. I'm sure. I see a question which has just popped up, and I guess you've answered that in some form. Moving on to Alexi, from let's say a completely different perspective in Europe. Two questions before I get into the use cases in Europe. We keep hearing, Alexi, about different forms of CBDC, which is token form or account form, direct or an hybrid approach. And to take that question further, also around aspects of traceability and anonymity. So Anuj, Ranjan just explained about the reasonability of anonymity. Can you just throw some light for our participants here as to what are these different forms of CBDC and also around traceability and anonymity?
Yes, absolutely. So thanks for inviting me to this panel. It's a pleasure to be here. So this is where we get to the nuts and bolts of CBDC, and one of the most fundamental design choices from a technical point of view is the question of whether it's token-based or account-based. And what we mean by that is basically a token-based CBDC would be a bearer instrument. So in this context, the token would essentially be a piece of computer code, basically a string of numbers. So you've turned monetary value into a token, and whoever is in possession of the token is in possession of the money. So the token practically would probably sit within a mobile phone or a payment card or somewhere like that. So this is in contrast to an account-based model where ownership of the money is based on identity. So you have been identified. You have an account in your name, and that's where you keep the money. And in the case of CBDC, that account is in the central bank. So an account-based CBDC would essentially be an account in the central bank, whereas a token could then be sort of a tokenized monetary value that could be in circulation on its own. Now, account-based could be direct or indirect, and sometimes you also hear the word hybrid. Basically, I think it means the same as indirect. So you could bank directly with the central bank, kind of, as if the central bank would be like a commercial bank. You would have maybe a branch or an online bank, and you could actually manage your account yourself. That would be a direct approach. The other approach would be indirect or hybrid, where you have intermediaries, banks or payment service providers who would provide access to your account, but the account itself would be managed by the central bank. The central bank would not provide the sort of end user services, but there would be other service providers on top of that. So that's kind of the basic choices that any central bank would have to make when designing a CBDC. Now, when it comes to traceability and anonymity, those are more like, I think those are more like policy choices rather than technical choices. So technology enables a lot of different combinations, in terms of data collection and so on. But I think, at least in Europe, central banks don't really have a business reason to collect a lot of data or to monetize data per se, and the public perceives central banks as maybe an option that would give them a higher degree of privacy. So that might be a strength of CBDC compared to maybe some commercial actors. But that's, as said, it could differ from region to region and country to country. It's more of a policy choice rather than a technical choice.
No, thanks for that, Alexei. I'll move on to Mark. Mark, from HSBC's perspective, considering we have presence across Americas, Europe, and Asia, what has been the experience in the rollout of CBDCs across jurisdictions, and how are commercial banks seeing CBDCs? It's disruptive technology. Do you think commercial banks will adapt to this new technology? Is it something which will question their current models, or you think it's something which there could be synergies with?
Thanks, Suvir. Great questions. So I think it's, and Alexei's set up this question quite well. So when HSBC is looking at the environment and looking at how we help our central banks across the globe and our customers embrace CBDCs, we as a large multinational corporate or a universal bank need to solve for how we're going to integrate with this. So we end up with this bit of a Rubik's Cube of how do we solve for transition to wholesale, retail, token, and account-based CBDC. And again, as Alexei and Mr. Ranjan have gone through, there's two different ways that we're seeing central banks starting this, either domestically or cross-border. They're looking at direct, indirect, or hybrid, and most of the live or pilots that are going on at the moment are looking at indirect. So they're looking at commercial banks to be part of that money or currency supply chain and distribution of CBDC. So we're seeing that occurring at the moment. And then if you look at, again, how we operate, where we've got banking licenses in 64 different countries. So to do that across the globe, across 60 different countries, when we're thinking about emergence of new tradable assets and competitors, how that would change to risk, liquidity, operations, and technology. We need to also be thoughtful and mindful of the changes to regulation, to different monetary policies, and also the geopolitical landscape. So it's a big challenge for commercial banks. However, I see that there's a lot of opportunities around that. So given that backdrop and that landscape, then HSBC has been looking at central bank digital currencies since 2018. And so we started our journey early on with Project Ubin and Jasper, working with the likes of Bank of England, Bank of Canada, and MAS. More recently, you would have seen in the press that we've been actively experimenting in Europe with Banque de France around bond issuance and settlement of that. And then in Asia Pac, we've been looking at Project Inathon and Line Rock, which was between Bank of Thailand and HKMA, and now involved in the MCBDC project, or MBridge project, which is extending out to UAE and Public Bank of China. There has been a number of different bilateral conversations with a number of different central banks. We feel that we've got good pedigree in helping our central bankers along this journey, and also a good digital backbone to help in the tokenization of bonds, the storage of those bonds in digital vaults, to do cross-border payments with solutions like FX Everywhere. We've got a trigger chain as well, so that we're able to connect into some of these new, existing, and emerging DLT ecosystems to trigger payments from the smart contracts into traditional payment rails. So that's how we're embracing it. I think that, as I said, there's lots of opportunities for commercial banks to still be part of that currency supply chain and provide services that we do today around credit, lending, mortgages, AML, KYC, etc. So it's a new form of digital cash, and how we embrace that, I think, is going to be, there's lots of opportunities there. Thank you.
Thanks, Mark. So Ranjan, moving on to you, let's say again in a country like India, what do you see as, let's say, the most important wholesale and retail use cases for a CBDC? If I could ask you that, wearing the RBI hat. I mean, nothing specific, but just what would you want to see as the actual use cases of a CBDC?
I was guessing that this would come, but anyway, having asked this. See, as it is in public domain, RBI is currently working towards a phased implementation strategy and examining use cases that could be implemented with little or no disruption. So that is the basic thing. And the key issues that are being examined are the scope of CBDCs, whether in retail or wholesale, or both, or one of them to start with. So this is being examined. Then underlying technology, varying choice of technology like DLT or centralized ledger according to the use cases. The validation mechanism, whether it will be token based or account based, distribution architecture, like whether directly issued by the central banks or it will be through banks. And then as I mentioned in the earlier reply, the degree of anonymity. So it is quite possible that different design features may be tested for different use cases. For example, underlying technology under wholesale segment need not be concerned with scale of operations, because which will be a major factor when it comes to token and account based scenarios. So it depends on the use cases, but as it is expected to reduce the settlement risk, the need for interbank settlement will not be required. So this can have potential use cases for bond market, other segments where financial institutions transact among themselves. So retail segments, I would say CBDC can serve all use cases which cash serves, and the use cases are limitless, and it can support the public policy objective by providing a very safe and resilient means of payment. We have heard about programmable CBDC, like pre-programmed CBDC could be issued for direct benefit transfer. Somewhere we have seen LPG subsidies. So the agencies can go to a bank and get that CBDC converted into commercial, having necessary authorization, can change to the name. So get into a fiat currency and enjoy that benefits of transmission. Similarly, cross-border remittance, retail payments, consumer to consumer, consumer to business, business to business. So even MSME lending is one where we find this can be used as a kind of directed lending to the needy and people. This could be an act as a stimulus for MSME sector. So a lot of it's, as I said, limitless, and as we examine and as we move forward towards the pilot, maybe we'll be able to get the best and non-disruptive one. So that's from my side.
By coincidence, sir, we have a question. Will we see a pilot by the RBI in December, as has been reported widely? So I guess you've already answered that. So unless you want to add anything, but by coincidence, that question just popped up on our Q&A.
As our governor and deputy governor mentioned, by the end of the year, this year, we're trying to come out with a pilot. So
sure,
we are working towards that. So let us see.
Sure, sir. Thank you. Alexi, again, completely different perspective, and from, let's say, from your perspective of what you are seeing in Europe or specifically Finland, what are the use cases and what are the various stages which countries are at when it comes to an issuance of CBDC? If you could just throw some light on that, because I guess, as Ranjan explained, the use cases for India could be completely different for a use case for a country in Europe. So if you could just help us with what are the use cases which are being discussed and implemented there.
Yeah, I'd be happy to. So, when we talk about Finland, we're of course part of the Euro system, which is a system of 19 countries with a shared currency. So that already covers a lot of Europe. Looking at some of the other countries, let's say UK, Sweden, they also have their own projects, which are, more or less in a similar stage in terms of progress, following their own paths, of course, in terms of policy and design. So for the Eurozone, we primarily look at retail CBDC. And the reason for that is that we already have a quite sort of advanced infrastructure for the wholesale cases. So we have a system which covers securities, which covers fast payments or real-time payments, all under the Target Services brand. So in a way, we already have CBDC for wholesale use cases. So the project that we're actually kicking off this week, which is initially a 2-year project within the Eurozone, 19 countries basically working on a single project, is primarily looking at retail. And I guess like India, we already have a lot of commercial actors. We have a pretty well functioning digitalized payment market, and the commercial actors are providing really good services. So there's no immediate need for a central bank, for a central bank to offer the same kind of services that commercial providers are already, bringing to the market. That said, I think what a CBDC could, how the CBDC could improve the situation is add resilience. So bringing one more sort of alternative infrastructure to the market that could make the, from an infrastructure point of view, the system more resilient. And then from a consumer perspective, it could give more choices. Maybe there are citizens who don't want to bank with any commercial bank. It's up to anyone to choose where they want to keep their money. It would simply be one more choice. And which I already mentioned is that the degree of privacy is maybe something that the Eurozone is specifically looking at. So that's maybe a sort of distinguishing factor that the Eurozone specifically could add to CBDC.
Sure. Thanks, Ranjan. Mark, hearing a lot, and we obviously will have a lot of young participants on this call. Keep hearing about it, which is programmable money. Blockchain technology can make buy and sell contracts automated. Can you throw some more color in a little detail on what that means? What is programmable money? How does this get used in bond settlement? We already do bond settlements in some way, not exactly in using a CBDC but in digital form. So any color on DLT and this programmable money?
Yeah, sure. Great question. I think the exciting thing around distributed ledger technology and indeed blockchain is it brings 3 really important elements for the business and users of that technology. And that is, first of all, transparency, workflow and programmability, and then finally, audit trail. And so once you have that transparency, then you're able to do and manage your cash a lot more efficiently. And similarly, when you implement it correctly, as both as the panelists have spoken about, then the power of that technology becomes very, very strong. In that you end up having a single version of a truth that is agreed, and if you put the appropriate rule books around it, etc., then there's some really exciting things that you can do. So not only with central bank digital currency, as we're discussing today, but if you look at some of the work that HSBC has done around supply chains, for example, and been able to track and trace goods and services as they move along the supply chain, whether that's from the farm through to the shop, or whether that's on a container on a ship. If you're able to start looking at that particular supply chain, or the movement of those goods and services along that supply chain, and start to embed FX payments and financing into those different supply chains using the underlying technology of distributed ledger technology, we see that there's lots of really good opportunities there. And similarly, as has been discussed today, looking at how you can use the power of that technology to be more immediate with the distribution of money into the economy for central bankers, for example. So if you look at just using a use case that could have benefited from using this sort of technology, If you look at the US recently, when they issued a COVID payment, they did that using paper checks. Now, if you're able to distribute your cash directly into a digital wallet that is held by the citizens of your nation, then you're able to more effectively control the way that you issue money into the economy and stimulate the economy. So we think there's some really good opportunities around that. Moreover, what we're seeing, and has been reported in the World Economic Forum and also Boston Consulting Group, is that we're seeing the tokenization of traditional capital markets. So when you starting to get into traditional capital markets and you're looking to tokenize or digitize a lot of the different stores of value and payments within capital markets, which is worth $867 trillion, then again, the way that you're able to better manage your working capital and the way that you're better able to manage your intraday liquidity and manage your risk off the back of it, because you have that transparency workflow and audit trail, then we see that there's some really good opportunities there. Also, we're at a really interesting time in history in that traditionally we've been using proof of work, and proof of work is what Bitcoin uses around blockchain. But now we're looking at proof of stake, which is a lot greener, and there's a lot more efficient ways of using the underlying technology. So we see that there's some really interesting opportunities if we embrace some of those design paradigms for the new digital market infrastructure.
That's that's a really interesting perspective, especially around what you mentioned, and I think Ranjan also touched upon it about how the monies which governments give can be, I think, possibly programmed or controlled in a better way using CBDCs rather than the traditional way of, let's say, distributing cash or checks. Moving on to Sir Ranjan, and we've got this a similar question in Q&A, so it ties in with what I was planning to ask. Cross-border remittances. India, we know, receives close to $50 billion a year of cross-border remittances. CBDCs, again, a lot of use cases which you read about in research papers is how it can be used in cross-border remittances. May not be connected, but by coincidence, there's a recent partnership as well announced between the RBI and the Monetary Authority of Singapore around cross-border remittances. So can you help us understand if and what is your understanding of CBDCs being used for cross-border remittances, and also this partnership which has been recently announced?
Yeah, thanks, Suvir. Actually, before just answering to your query, I thought maybe the two questions I'll just answer in a bit about the cost and the cross-border. Cross-border,
Sure,
your
sure,
question covers that. On the cost, since the cost of printing currency is high, the transportation, the storage, and all, ultimately the consumers or the customers bear that in the form of a fee or a commission charged by a commercial bank. So as soon as this comes down, the production of CBDC, the likelihood of the end users, customers getting the benefit is quite high. So that takes care of one part. On the cross-border, yeah, the modalities of cross-border payments are yet to evolve. The idea is to increase the efficiency of cross-border payments by introducing interoperability of central bank digital CBDCs. We all have heard about multi-CBDC, MCBDC arrangements. So if some of us have heard, our deputy governor yesterday, he said that CBDC can boost innovation in cross-border payments. It can make cross-border transactions instantaneous and overcome the key challenges relating to time zones and the exchange rate differences. So these are major benefits which we will derive. In other words, the frictions relating to time zone and exchange rate differences, as also the varying legal and regulatory requirements across jurisdictions, can be solved through a platform-based solutions. So CBDC enabled solutions can really make real-time price discovery possible, and even for a very retail-sized transactions. So that is the benefit. As regards the partnership with MAS and RBI on cross-border remittances, so it is a wonderful kind of, it is like RBI vision that our vision says that global outreach of India's payment systems, including remittance services. So this is part of that vision which we are undertaking. And now with the UPI and Pay Now linkage, will enable the users of each of the two fast payments to make instant, very low cost transfers on a reciprocal basis without a need to get onboarded onto the other payment systems. So this is the linkage builds upon the earlier efforts of NPCI International Private Limited and NIPLVK and the Network for Electronic Transfer, which is NETS. And this is to foster cross-border interoperability of payments using cards and QR codes between India and Singapore. So this is an initiative to enhance cross-border payment, including remittance. And this is envisaged to be the preferred mode for making payments to and from India and Singapore. As I told you, the benefits are, it will be like similar to domestic transfer. It will be holistic kind of solution for use of UPI for foreign transactions between two countries. It will bring down the cost of remittance, and it is like a showcasing the versatility of UPI for foreign transactions, and thereby we will try to increase its acceptability for other such corridors in bilateral as well as multilateral manner. So this is a very important step towards connecting payment system across countries, and we are going operational in July 2022. So it is going to be a major achievement so far as payment systems moving across the border. So that is what we are envisaging.
Well, thank you, sir. I must say, at least as head of fintech, you are definitely thinking ahead of the curve, because we think of something and that announcement literally came as a surprise. So again, I think like our payments infrastructure, we clearly are ahead of the game. So again, congratulations on that. Alexei, very quickly, we have 5 minutes, and I want to try and get all the panelists to answer this question. And by coincidence, I must say our participants also seem to be, getting the pulse, because there was a very important question which came: will this affect a bank's income? And I'm going to put this in three ways to all the participants. So after you, possibly Mark can go, and then Sir Ranjan can go. How does a CBDC affect commercial banks? Does it affect financial stability? Are we talking of taking deposits in CBDCs and starting to give loans in CBDCs? How do you see this entire thing evolving from a financial stability perspective? Because banks do remain a key form of propeller whenever you need economic growth, etc. So would want to get your thoughts on this.
Yeah, I think the broad consensus is that CBDC would complement rather than substitute any existing part of the financial industry. I don't think anybody wants CBDC to compete against any payment solution or any sort of existing business. So I think it's easiest to understand CBDC if you think about it as digital cash, and this is also from a balance sheet perspective. So it's basically like a wallet where if you withdraw money from your commercial bank account, you can put it into your CBDC wallet. That would be similar from a balance sheet perspective of withdrawing cash from an ATM. So that's really the main idea of at least retail CBDC. So I don't think anybody wants to disrupt the banking industry or the payments industry, which is, innovation takes place primarily in the private and the commercial markets. It really central banks are not the ones who are developing new services or improve UX for customers. I think that's really that comes from commercial actors. That said, the central bank can add resilience, can add improve the infrastructure so that settlement takes place in a more reliable and fast way. But other than that, I don't think the idea is to replace or compete with any existing part of the existing financial landscape.
Thanks. Mark?
Yeah, I would agree with Alexei. I think also if you look at some of the key messages that comes out from the BIS, one of the most key ones is do no harm. So when you're implementing this new form of currency, then the key thing is to do no harm. And I think we've successfully demonstrated over several hundred years the successful relationship between central banks and commercial banks as in that money supply chain. So although we may be upgrading the underlying infrastructure, as I said before, I think there's a number of different opportunities around the different types of services that we can offer our clients by having a digitized form of payment and value on these new rails. So I think there's more opportunities than threats.
Sure. Sir, from your perspective, what would you see as the impact?
See, they have covered the broad points. I would just add to that the design of CBDC has to be it has to be compatible with the objective of monetary and financial stability, right? And one possible way of addressing this might be putting a cap as per capita holding of CBDC in. And this, what it would do, it would help the economy, benefit the economy from the technological attributes of the CBDC, while it will also ensure that there is no behavioral change in the financial savings in the economy. So, as I told you, it has to be done in a phased manner, and learnings and the awareness will help us in evolving and designing the architecture and the form of the CBDC. So, I think it can be addressed. There is no concern on that.
Sure. I know we have the last, I think, 2 minutes. So again, any comments from the panelists? Any last comments? Otherwise, again, it's just amazing. We've got very good feedback on the panel, and it's the questions which seem to have come. It just is a very informed audience. I see again a question from Faiz that will there be still a need for commercial banking deposit taking capabilities with CBDC? I think so Anuj just answered that. We spoke about the impact on banks. We spoke about cross-border remittances. I guess we covered programmable money, the impact on how it is different across Asia and Europe. So I think we've honestly covered a lot of the questions. Any last comments from the three of y'all before I just give the closing remarks? Any last comments?
Well, I can start maybe from the European perspective, is that we try to look at CBDC with a very long time horizon, and kind of envision what the world will look like, not today, but in 10, 20, 30, maybe 50 years. So, I mean, it's at the same time, that's very difficult, but that's really the idea, is that we're moving towards a much more digitized world, which is moving faster. And that's where CBDC will be designed for, not necessarily the world we see today.
I would conclude with two sentences that, as other panelists have said, that this is not, CBDC is not competing with cash. It is complementing. It is not competing with the current advanced payment infrastructure in the country, in India. It is in fact kind of complementing and it's strengthening that and using that infrastructure to develop the currency distribution. That is the way it is.
And from a commercial bank perspective, hopefully, as we've demonstrated today, we've got a good understanding around central bank digital currencies, and the best way to learn and the best way to adapt is by going through experiments and partnering with central banks and different actors in the marketplace to work out what are the best design choices, because you'll only learn by actually doing the experiments, and some of the experiments we're doing at the moment, whether it's interoperability, cross-border bond issuance, etc., we're learning a hell of a lot. So I think that's the best way to learn, is by having panels like this, having really good informed discussions, and being thoughtful around the design considerations that we need to take on board.
No, thanks for that, Mark. Thank you to the audience for listening in, and to my esteemed panelists for sharing their knowledge on CBDCs. I hope everyone found the session interesting. I definitely learned a lot as well. This topic and subject is going to just keep catching and picking up interest, I'm sure, in the future. Like any new technological evolution, I remember when UPI came, there were questions, and people didn't know how to use it, and now there was a statement by the finance minister that I think the number is 6 lakh crores in the last month. So it's just amazing. And I'm sure CBDCs with the right amount of private sector innovation, the right amount of regulatory oversight will ultimately have a positive impact on individuals, SMEs, large corporates, and the financial service industry as a whole. So thank you once again, and I will hand over back to the speaker.
Thank you so much. Thank you very much, Suvir. Thank you. And thank you, Sri Ranjan sir. Thank you, Mark. Thank you, Alexi. Absolute pleasure. I was hearing the discussion. And I think it is the kind of questions, the amount of questions we've received. Like I said, it's only because of the time we can't take it. But thank you very much. And please take care.
Thank you. Thank you very much.
Yes, sir. Thank you.
Thank you.
So after such amazing dignitaries sharing a lot of experience and information with all of us, it's time. Thank you very much to each and everybody for joining this session.